I bet today is the 12th of April, and today we're simply just going to be doing a weekly review for the week that has just elapsed. So that would be from the 6th of April throughout the 10th of April. And then we are also going to take a look at the previous week's trading. And then lastly, we're going to have an overview on Ethereum. So taking a look at NASDAQ on the weekly chart, we have our week opening right here, and then we have our previous week low and our previous week high. Now we see that this week's trading was rather expansive towards buy side, and we're currently drawing towards these highs that reside right here. So taking a look at the daily, so what we have on the daily, we have this deliverance down towards sell side over the course of the month of March, and we have the engagement with a monthly BISI high, and then we also have an engagement with a daily BISI on the left side of the curve that's been projected out in time. And then there is also a standard deviation, so from this high all the way down to this low, we have our minus 2.5 standard deviation, and this has been utilized for that move back up towards the buy side. So with the engagement with this daily BISI, we end up having price action delivering up towards buy side, and we have the inversion of this SIBI right here. We have the next day delivering up towards buy side, and then we have the formation of this imbalance right here overlapping with this SIBI. We end up seeing the next day deliver down towards sell side, engaging with this imbalance as well as engaging with this daily SIBI, and we see very efficient price action coming out of it. So we have no closure inside of this bullish imbalance, as well as no closure inside of this bearish imbalance that resides right here. And price action simply snaps right back up and then closes within this bearish imbalance that resides here. Now, something to take a note of before we move on, we end up seeing that this candle right here, this would be the opening of our monthly candle. So the 1st of March, this is where our monthly candle opens. And what we take notice to is that we have the monthly opening right here. And the low of this day is this respective BISI's high. And where it's located is under the monthly opening. So this BISI would be located in a discount in relation to this monthly opening. And we see the utilization of this imbalance very efficiently to snap price action right back up. We then have the following day simply being a inside day, so the day is consisted within the range of this previous day's candle, and I'm pretty sure this was a Friday. So yes, this was a Friday, and Friday was a bank holiday as well, and we also had NFP on that day. But in fact, I didn't even know it was going to be a bank holiday, but we're going to touch on that later on. So finally getting into this week's price action. So we have Monday, Tuesday, Wednesday, Thursday, and then Friday. And what we take notice to is the fact that we've just had continuous buy-side delivery over the course of this week's trading. And it's been rather expansive moves up towards buy side. And where price action is currently drawing towards would be the previous month high. So it would be the month of March in which price action is currently drawing towards. So with the Monday opening right here, where Monday opened was inside of this bearish imbalance right here. So Monday ends up closing, and then we have the inversion of this imbalance, and we see Tuesday utilizing this imbalance in a very efficient manner. So we have the inversion of this PD array during Monday's trading. Tuesday delivers into this imbalance, as well as engaging with the Monday low of day to form the low of the week on NASDAQ on Tuesday. So we deliver under the weekly opening, engaging with the Monday low of day, as well as engaging with the inversion that resides right here for that deliverance up towards buy side. So taking a look at the hour 4, we have the engagement with the daily BISI as well as that monthly BISI high, and we have a cracking correlation that presents itself right here. So standard deviation being projected out in time from this low all the way up to this high. We have a -2, -2.5, and a -4, -4.5. And then we have that deliverance up towards buy side, and we see how the daily BISI is being utilized on the hour 4. We're not seeing any closure inside of it, which is very, very efficient, as well as the fact that not only are we engaging with the daily SIBI, we are also engaging with this bullish imbalance that resides right here and this bearish imbalance that resides right here as well during this segment of price action. So we have that deliverance up towards buy side, and then this is where we see that lethargic price action, where price action spends some time inside of the daily imbalance that resides right here. So we have the weekly opening right here, and we see price action deliver up towards buy side, and we have that closure above the daily SIBI. And then we have Tuesday delivering down towards sell side, engaging with that Monday low of day, delivering under the weekly opening, as well as engaging with the daily BISI or daily SIBI, which had been inversed. during the Monday's price action. And then we have a standard deviation. So from this candle's low all the way up to this candle's high, projecting for a -2, -2.5, which is in alignment with the previous monthly high. And when we are observing the hour 4, what we also take a notice to as well would be how the bodies are being very respective of our weekly opening. So we have the week opening right here, and we see that deliverance under the weekly opening. The bodies are being very respective. The wicks are painting outside the lines in regards to the weekly opening, but the bodies are being respective. And then we have that deliverance to continue up towards buy side. Now, when we take a look at the left side of the chart, we have a TLP that resides here. Now, in my previous weekly analysis, I was mentioning the fact that for one, we have this TLP on the daily that resides right here. So we have the previous month high, TLP. All of these highs are just simply stacking up on top of each other. And then on the hour 4 as well, we're seeing a TLP way lower down as well. So what we'd be looking to see is price action run through this TLP in a very willing manner, because it's high resistance price action. We know that where high resistance prints, low resistance will print as well. And that's what we end up seeing. So we have the 1800 opening right here. So I'm pretty sure this would be Wednesday's trading, 1800 opening. And then we have instantaneous deliverance straight towards buy side, engaging with all of these highs that reside right here. From that 1800 opening, we see price action deliver into this unfilled hour 4 SIBI, and then we end up closing above this SIBI, and then it's then utilized as support. So we see the return back down to engage with this SIBI. Price action is being very respective in relation to the body. So we're seeing how many times the wicks are coloring outside the lines of the SIBI, but the bodies are being maintained. There's a lack of volume, and then we end up having that deliverance up towards buy side, closing back above the high of that SIBI. And then we end up seeing this candle utilizing it for that buy side delivery motion. Now, taking a look at the hour 1, simply just getting a more descriptive perspective of the price action over the course of this week. Every vertical line is anchored to the 1800 opening. So we have 1800 Sunday, 1800 Monday being the Tuesday settlement opening, 1800 Tuesday being Wednesday settlement open, so on and so forth. So we have Sunday/Monday price action. We have the week opening right here. We have that deliverance up towards buy side, and then we end up closing above that daily SIBI, and then we end up seeing Tuesday's price action returning back down into this daily SIBI, utilizing it as support, and then we end up having Tuesday opening right here. And what Tuesday ends up doing is we deliver down towards sell side, engage with this BISI, which was utilized as support during the Monday's trading, and then we deliver up towards buy side, presenting a Kraken correlation right here. And from this Kraken correlation, this invites price action to begin delivering down towards sell side, engaging with that Monday low of day, presenting a Kraken correlation. And we also see how the bodies are being respective of our daily SIBI. So we're not delivering or closing under our daily SIBI. And what we end up seeing is we end up delivering back up towards buy side. And this same imbalance that was used as support once upon a time is then reclaimed. And we see price action utilizing as support once again. So during this candle's trading right here, we close back above this hour 1 imbalance, and we see a return back into it. But what do we take a notice to again? The bodies are being very respective of this imbalance. We see this down close candle. It delivers the full range of this imbalance, but we don't see any closure outside of it, as well as the fact that what we are doing here is engaging with the weekly opening, and we see how the bodies, again, being respective of our weekly opening. And then we have a closure above this down close candle, and you can also deem this an order block, as well as the fact that you can also anchor yourself a standard deviation with this leg. So from this low all the way up to this high, you could anchor a standard deviation, but I simply didn't have one. I was utilizing this standard deviation. So from this low all the way up to this high during Tuesday's trading, we have this standard deviation projecting for a -2, -2.5, and this is where we end up seeing the reaccumulation of orders on the hour 4 inside of this hour 4 SIBI that resides on the left side of the chart. So finishing off with Tuesday's price action, we have the reclaiming of this BISI right here, engagement with it, and then we have that deliverance up towards buy side, and the day ultimately collapses right here, engaging with what was the intraday high of day to then form a new high of day. And then we have Wednesday's trading, in which we simply have the 1800 candle open, immediately deliver up towards buy side. And this deliverance up towards buy side is what is engaging with all of this TLP that resides on the left side of the chart when we're paying attention to the hour 4. So 1800 open, deliverance straight towards buy side. We're seeing bullish signatures presenting themselves. The next candle opens, devil's mark, no low under it, deliverance straight up towards buy side. And then we end up having that closure above the hour 4 SIBI, and then we end up returning back down into it. So with the Wednesday expansion right off of the 1800 opening, we end up seeing price action falling into a phase of consolidation. So price action begins to move lethargic in terms of we're not seeing a willingness to really move anywhere, and it's very evident during the Thursday's price action. As we see, there is a lack of bodies as we are printing candles right here. We're seeing a lot more wicks than bodies over a prolonged period of time. But what we are also doing is engineering buy sides. We can see that the highs are simply just being left intact right here, which is inviting for this type of candle that resides here, a rather bullish candle to deliver straight up towards buy side. And with this candle, during the Thursday's price action, we end up seeing this candle not only displacing towards buy side, but also closing above this hour 1 imbalance right here. Now, I don't have this annotated simply because it's overlapping with the hour 4 SIBI, and it simply just be too much, it's just too much on the chart. But paying attention to this imbalance right here, this candle ends up closing above it, and then we end up seeing the utilization of this SIBI that resides on the left side of the chart as support. It was once utilized as resistance for this sell side delivery motion. Closure above it, it's then utilized as support. And not only is price action coming down and engaging with this SIBI that resides right here, we're also engaging with this BISI that resides right here for that buy side delivery motion that we see to draw towards the previous month high. And then we finally go into Friday's trading, being the last day of the week. And with Friday's trading, we have the 1800 opening right here. And already we can see Friday just didn't do a whole lot of anything. It was very lethargic price action. We followed the exact same suit that we kind of had here. From Thursday's price action, it was basically brought into Friday's price action as well. Actually don't have it marked out, but we do have a cracking correlation that resides right here. So this high, we have a cracking correlation that resides right here for that sell side delivery motion. On Friday, we did have CPI. Is this CPI? Yeah, Friday. That's actually odd. It's normally CPI is normally I didn't even think of that. Normally CPI is a news event that you'd catch being on either Tuesday, Wednesday. In terms, okay, I'm going on a tangent here, but in relation to the news events, the ones that we really like to pay attention to would be, I basically dubbed them the main three. So you have NFP, you have CPI, and then you have FOMC. And then the other ones you'd want to also keep an eye out for would be anytime Trump is scheduled to speak, as well as Powell being scheduled to speak. But with these news events, they have an order in terms of you're going to see NFP first, and then you're going to see CPI second, and then you're going to see FOMC third in relation to the weeks. So first week of the month, you will have NFP. Second week of the month, you're going to have CPI. Third week or sometimes fourth week. To be honest, it's not even there in the top of my head, but I know it's third. And then you're going to see FOMC. Now, your general... Now, in relation to FOMC, it's always landed on a Friday. From what I can remember, I've always remembered NFP landing on a Friday. And then in relation to CPI and FOMC, they are interchangeable. Sometimes they can be on a Wednesday, sometimes they can be, so either Tuesday, Wednesday, or Thursday. I haven't seen CPI on a Friday in quite a long time. And to the best of my knowledge, the only reason why I could presume that CPI has landed on a Friday would be because the previous week, Friday, we ended up having NFP, and Friday was actually a bank holiday, which I did not know. I didn't know it was a USD bank holiday in terms of the markets were going to close early as well. I simply only seen Euro being a bank holiday, so I didn't know USD was also going to close early. I simply thought it was going to be, a normal day in terms of the opening times and the closing times as well, because all I seen here was the NFP. So Friday's price action was very lethargic, and we're actually going to get into that because there's a whole lot more, because I simply didn't do a review for this week simply because I was away, but I was commentating over this week's price action on my Telegram. So we're going to take a look at what I was saying over the course of this week as well. But moving on away from that. So now we're going to take a look at what I was commentating over the course of the previous week that we so now we're going to take a look at what I've been commentating over the course of the previous week. So on my Telegram, so dates all up here, times all up here. So this would be April the 1st. So it's when we have that monthly opening. So this is the chart that I'd sent in. And looking at this chart, we have this deliverance down towards sell side, engagement with the -2, -2.5, and then we have the deliverance back up towards buy side, engaging with this daily SIBI right here. Now, this is something that's just really going to annoy me because Telegram be just making the quality of images very poor. Going to zoom in here, the pixels are just non-existent, but zooming in here and using our eyesight to the best of our abilities, we have the monthly opening right here. So we have the monthly opening, and what we take a notice to is that there's a devil's mark that resides right here. So the commentary that I said over this would be, I believe this move towards buy side was simply just a reaccumulation of orders to continue that sell side delivery motion. So what I was saying is essentially, okay, we've engaged with the -2, -2.5. We know that the -2, -2.5 can be utilized for one of two things: a reaccumulation and a redistribution of orders to continue down towards terminus where you have your -4, -4.5, or a smart money reversal. So I was stating the fact that I believe it's simply a reaccumulation of orders to continue the distribution down towards sell side. I didn't believe that we were going to experience higher time frame institutional sponsorship from what we have just engaged with, because we engaged with a monthly BISI high and a daily BISI as well. And in relation to higher time frame institutional sponsorship is anything in relation to higher time. It's anything in relation to higher time frame, but institutional, you're looking at anything above the daily. So daily, monthly, and if you want to, refine the intervals, 3 months, 4 months, 6 months, that is in relation to institutional, because institutional, we're referring to a lot larger scale entities. So I was saying that I didn't believe higher time from institutional sponsorship was occurring here, but I would not be married to an idea that I have in mind, and I will pay attention to the facts, being the signatures that are being presented in price action. Now, the idea that I had in mind is that in my most previous weekly review, the idea I had in mind is to see price action continue this delivery down towards sell side, engaging with this monthly BISI high, and then we could end up having speculations for the low of the year. Reason why being is because we have standard deviations being projected out in time, and we end up seeing this standard deviation, which is rather large, of the -2, -2.5 is a weekly standard deviation, and then we have a daily standard deviation right here, and then we have another daily standard deviation right here, and they're all projecting under our monthly BISI high, as well as under an equilibrium of a range. So I was looking at the fact that, okay, the monthly chart is going to deliver into a discount of the given range it is trading into. We can end up seeing institutional sponsorship occurring from right here. So that is the idea that I was saying I'm not going to be married to, and I'm simply just going to pay attention to the facts of what price action is printing in a sense. And then I mentioned that currently observing the daily SIBI price action is engaging with, and the series of down close candles. So we have these series of down close candles, and then I was observing this daily SIBI. I wanted to see how price action is going to trade inside of it, around it, and what signatures are going to be presented on the lower time frames. And something that I'd also taken a notice to was the fact that we ended up inversing this SIBI that resided right here. Now, I didn't like the inversion of this SIBI at all, but I was giving it the benefit of the doubt. Reason why being is because we had simply just rolled into a new quarter, and we had simply just had a new monthly opening, as well as the fact that the reason why I didn't like this is because I wanted to see this imbalance be utilized as a breakaway gap, because it would have been utilized to take us out of this lethargic price action that we were seeing initially. So I wanted to see this imbalance remain open and price action utilize this imbalance that resides right here. But we see before the month opened, we ended up having this candle simply very aggressive deliverance up towards buy side, and we had the inversion of this SIBI right here. So then went on to mention new monthly opening, no low of the month formed yet, power of 3 for April yet to be set into motion, very shy price action around the monthly opening. So that devil's mark, we're not having deliverance under that monthly opening, and then devil's mark is apparent on YM, and then previous month low was intact across all assets, so none of the assets engaged with the previous month low. And then we have the next day, so this would be April the 2nd. What we take a notice to is the fact that, okay, we have this deliverance into the daily SIBI, and we don't close above it, but we do end up closing above the consequent encroachment. So simply just using a naked eye from this low, from this candle's low down to this candle's high, consequent encroachment comes in around here. We close above the consequent encroachment. You generally don't want to see that. In terms of, okay, I'm looking at price action to be bearish, you don't want to see you don't want to see the bodies. The wicks can deliver there. That's well and fine. You don't want to see the bodies closing above such a level. So we have that closure above the consequent encroachment, and what we end up seeing is that I don't even know what days these are. I'm gonna have to get a calendar out. Yeah, so 2nd of April would be a Thursday. So this is Thursday's price action, and what we end up seeing is that deliverance down towards sell side, and then we have the engagement with the monthly opening. We're correcting that devil's mark that I was bringing attention to during the 1st of April, which would be Wednesday. So we end up delivering under the monthly opening, and then we also engage with this imbalance that resides right here. So with the closing of Wednesday's trading being the 1st of April, we end up forming a bullish imbalance. And this bullish imbalance is overlapping with this bearish imbalance that resides right here. And we end up seeing Thursday delivering down towards sell side, correcting that devil's mark, as well as engaging with this bullish imbalance and this bearish imbalance right here. And then we take a notice to how price action snaps right back out of it and closes back inside of this SIBI that resides right here. I didn't like this. I didn't like this in terms of if I'm looking for price action to continue this sell side delivery motion, price action is not showing me the signatures that I'd want to see. This is a very bullish signature. Very, very bullish signature. The candle has completely reversed right back on itself after all of this sell side delivery motion. So the comment that I stated on this was, I refer to this as a stalemate. Hands should be sat on until clarity is arrived at. And I'm intrigued to see what NFP can serve in relation to its injection of volatility. Now, the reason why I was referring to this as a stalemate was because when we're taking a look at this chart, where and what is price action doing? What we have just done during Thursday's price action is deliver into a bullish PD arrays. And where we currently were was inside of a bearish PD array. It's contradicting. So what we're looking to see is price action what we're looking to see is price action to just break. So if we actually just take a look at what the price action looked like during Friday's trading. So we have that Thursday trading snapping back in, and even so we see the candle closed bullish. When we're looking at this right here, the candle was still bearish, but the day was still yet to close. So we still had, quite a while till the day was going to collapse. But going back here, and we're simply just going to go on to replay so we can take a look and observe what price action did on Friday and the reason why it is a stalemate. Because for one, even just taking a look at the daily, it's an inside candle. Inside days are generally not the best type of days to look to engage for price action. The price action is going to be very lethargic and unwilling to go anywhere, as well as the fact that Friday was a bank holiday. We ended up closing the day early, and I was not aware of this, which is why I was looking to see what NFP would do. And even so, NFP could have still done something even though the day closed early, but it simply didn't do anything because we were in a stalemate. So we have the 1800 opening right here for Friday's trading, and this is literally what we are met with. Very lethargic price action, very boring price action, absolutely nothing. And then we have that 830 candle opening up, and what do we take notice to? What 830 done? We end up seeing NFP delivering up towards buy side and then closing back down. But what it ends up doing is engineering more highs once again. This is not in alignment with an idea for me looking to see price action deliver down towards sell side. So when I come onto the charts and I am observing price action, I sit down and I simply observe and acknowledge what price action is doing, and I come to a conclusion, I come to an idea. With that idea in mind, I am then looking to see signatures in price action either confirm or invalidate my idea. Now, if in this case I had the idea of price action delivering down towards sell side initially, I'm going to be looking for signatures in price action to validate that idea. And if I'm seeing the opposite signatures, it means the idea I have in mind is invalid. And this is why it's important to not be married to a bias, because if you're married to a bias, what you're essentially doing is forcing your will, and you're going to look to try and capitalize on any opportunity that is in alignment with the married bias you have. and force your will upon the market. And forcing your will upon the market is never a good idea. It always ends up bad. The market does not care about you. It doesn't even know you. It doesn't care about your will. It doesn't care about the idea you have. It doesn't care about any of that. It's simply just going to do what it is designed to do, which is seek inefficiencies and liquidity in price, all governed by time. Now, I've gone on a little tangent there. I'm not quite sure where I left off, but we have that 830 NFP and simply just the engineering of highs. We don't come and engage with this high right here. We don't come and engage with these highs right here. It would have been if NFP ended up delivering up towards buy side, clearing out these highs, and even better, clearing out this high and closing back down inside of the range. That would have been a lot more cleaner, and we may have seen signatures that would permit for that sell side deliverance motion. So this screenshot was taken at 15:26, and quite literally 10 minutes later, I added on some more commentary. So we have the daily chart and then we have the hourly chart. So we're taking a look at the daily chart. What we take a notice to is the fact that we have this deliverance down into this bearish imbalance as well as this bullish imbalance that resides right here, and that deliverance under the monthly opening. And then when we take a look at the hourly chart, this is a lot more descriptive of what we have going on within price action. So we're going to start from right here. We have that deliverance. This segment of price action right here is the deliverance into the daily BISI as well as that monthly BISI as well. And then we have that cracking correlation, and we have a standard deviation projecting out, -2, -2.5 projecting for these highs, -4, -4.5 projecting for this segment of price action right here. And what we are supposed to take a notice of is the type of deliverance we're having on the hour one. We're aligning our time frames right now. So we have that deliverance up towards buy side, and this high right here would be the high of the 1st of April. So this would be this candle's high right here. That is where this high comes in. And then we have this deliverance down towards sell side. Now this deliverance down towards sell side is engaging and correcting our monthly opening, and we are also delivering into that daily imbalance as well. And on the hour one, we're delivering into this hourly imbalance that resides right here. Now, standard deviation being projected down in price for sell side, we have a -2, -2.5, and what I took a notice to is the fact that price action was very respective of this level. We've just delivered into a daily imbalance, and then we have also delivered into an hourly imbalance, and what we end up having from that deliverance down into that daily imbalance is a change in stay in delivery. So we have the formation of an order block right here. This price action is too clean, incredibly clean. And I think I mentioned this in one of the trade analysis in terms of the price action that we've been seeing across the intervals. So when we're looking at the daily, when we're looking at the hour 4, when we're looking at the hour 1, price action is incredibly clean in a sense in terms of, like, you know, the signatures that it's presenting and how it's delivering. So we have this deliverance down into the daily imbalance, change in stay in delivery, formation of an order block, as well as the fact that we see the alignment with the monthly opening that resides right here, and this candle closing above the monthly opening. The next candle, engagement with our change in stay in delivery, as well as engaging with the monthly opening, and we see a very expansive candle following right after, and then the inversion of this imbalance that resides right here. These are all bullish signatures. These are not signatures of bearish price action. And the statement that I said with these two images would be, however, I won't be ignorant and ignore what is currently being displayed to me. The daily BISI engaged with, this BISI is located in a discount in relation to the month of April, the monthly opening of April. So taking a look at that daily again, we have the monthly opening of April, this BISI located in a discount, deliverance under it. The daily candle snapped out of this daily BISI, and clean structure presents itself on the hour 1, aligning our intervals. So that's exactly what we're just taking a look at. Deliverance down to that daily BISI, hour 1, aligning our time frames, change in stay in delivery, order block formation, clean price action coming right out of it. And then from here, we have a standard deviation. So from this candle's low all the way up to this candle's high, we have a -2, -2.5, and a -4, -4.5 projecting for these highs that reside right here. Now, moving on to the next screenshot, this would be on the 7th of April. And the previous one before that was on the 2nd of April. So I was with family during Easter, so I wasn't as active, and this is the reason why I did not do a weekly review for this week, even though the week was incredibly clean. So we have the next input on price action, and this would be from the 7th of April. And so what I was paying attention to right here would essentially be we have this deliverance up towards buy side, retracement back into that daily BISI, deliverance out of that daily BISI, and then we end up seeing price action having a consolidation. And this consolidation, I'm pretty sure, is around the weekly. Yeah, this consolidation is around the weekly high, because the 7th of April should be a Monday or Tuesday. So 7th of April would be a Tuesday, and then 6th. So yeah, 6th, 7, oh my God. So yeah, we have the 6th and the 7th of April, and we have that consolidation of highs that reside right there at the weekly opening. And we have the Kraken correlation that presents itself right here. And from this Kraken correlation, we have a change in stay in delivery. And with this change in stay in delivery, we end up seeing the next candle engaging with the mean threshold. And we see no body closure above our mean threshold of the order block. And then we have that deliverance down towards sell side. And then we end up presenting another Kraken correlation. So we end up presenting a bullish Kraken correlation. And with this change in stay in delivery, I had a standard deviation being projected out. So from this candle's high all the way down to this candle's low, we had a -2, -2.5, and a -4, -4.5, which was projecting for the previous month low. Now, the commentary I said on that picture would be, I'm going to look to see how the daily candle closes. Kraken correlation at buy side and sell side being signatures of consolidation. So I'm going to look to see willingness to displace through either side. So I'm going to look to see price action show a willingness to displace between either buy side or sell side. Now the emphasis on this would be, I'm going to look to see how the daily candle closes, because the screenshot was taken at 1500 and this phone is set to New York Eastern time. So I'm essentially looking to see how the daily candle is going to close. And this is how the daily candle was looking like. So literally just 5 minutes later, I'm looking to see how the daily candle closed. And what am I looking to see? I'm looking to see if we end up coming back and closing back under this imbalance's low. So I'm looking to see if the daily candle is going to come back, close below the imbalance's low, as well as close below the previous day's candles open. So I was looking to see if price action is going to close below the previous day's open. So the statement behind this image was, like I said in my most recent weekly review, I was not looking to see higher time frame institutional sponsorship occur until the monthly BISI in a discount is engaged with, and then speculations for the low of the year can be made. So what I was referring to would be this monthly BISI right here, which resided in a discount. The daily BISI and monthly BISI that is not in a discount, which would be this monthly BISI and daily BISI, which is what we had engaged with, we ended up seeing buy-side delivery being followed from there. And I said it was important to note that the daily BISI and the monthly BISI that were engaged with and not located in a discount were unfilled PD arrays. Buy-side delivery followed and bullish SIGs were being presented. So my only problem was the correlated assets were not moving in tandem or sync. Now I'm going to go to this chart and we're going to take a look at what I was talking about. So we'd be going back to this price action right here, and this would be the 7th. So when we're taking a look at the daily right here, we're looking at NASDAQ. We have the series of down close candles, and then we have a series of up close candles. Now, in one of the previous statements, I said I'm paying attention to the series of down close candles, as well as the fact that I'm paying attention to this imbalance that resides right here. Now, like I mentioned here, I was stating that the correlated assets are not moving in tandem or sync. And what I meant by that was, when we take a look at ES, what we see ES had done was, and actually I think this would be a whole lot more easier if I just did a split view. Hold on. So we have NASDAQ in the middle, ES on the right, and then we also have YM on the left right here. So what do we take a notice to? Like I'd mentioned in one of the statements, I'm paying attention on NASDAQ, this daily SIBI, as well as the series of down close candles. Now, in relation to the correlated assets not moving in sync, when we take a look at YM, we end up seeing YM having a clean change in stay in delivery right here. YM has a clean change in stay in delivery, but we don't see the exact same thing happen for NASDAQ at the same time that YM had a change in stay in delivery. Instead, NASDAQ is actually stuck inside of this imbalance that resides right here. And something that's important to take a note of is the fact that YM doesn't also have that imbalance there as well. So the imbalance that is present on NASDAQ is not present on YM. And then when we take a look at ES, we end up seeing that ES has the inversion of the respective imbalance on NASDAQ. It has the inversion on the 2nd of April, while while NQ still has not had the inversion, although we do see those bullish signatures that we were observing on the hour one. So that is what I meant when I was referring to the assets are not moving in tandem or they're not moving in sync. And I was stating that NQ has spent a bit of an awkward minute inside of that daily BISI. And if buy-side delivery was truly upon us, there is a clear drawn liquidity being the TLP and the previous month high. So the drawn liquidity would be that previous month high as well as the TLP that resides right under it. And if I was to play market maker, I'd merely engineer more highs and leave this TLP and previous month high intact and continue to deliver towards sell side in an ideal world, of course. I was saying this was because there is still the idea of price action delivering down to this monthly BISI high. I was saying this with the speculation of looking to see how this daily candle was going to close and see if we were going to close under the low of this SIBI as well as under the opening of this candle right here. And then the next image I ended up putting in is from way earlier on in the day. And it's when we had the cracking correlation at the high, and then we ended up having a change in stay in delivery, but then we ended up presenting another cracking correlation right here. So I was already projecting the standard deviation looking at that previous month low, and I stated that the only reasoning for such a speculation now is because of what I'd seen on the hour 4 ahead of the AM session. But of course, it's a lot easier taking it day by day, as well as not marrying an idea. And then the next image I end up putting in, and let's be conscious of time right here, 16:13. The previous images we were looking at were literally at 1500, so it had quite literally only just been an hour. And yeah, just fries on everything I just said, bro. The daily candle closure is too clean in supporting that bullish order flow. We need to actually take acknowledgement to the fact that the daily candle was an hour ago was quite literally approaching under the previous day's opening. So an hour ago, this was where price action was. And then we end up seeing an hour later, price action had completely reversed all throughout this price action. And not only just reversed all on the candle itself, it also has delivered above this daily SIBI that resides right here, which is why the daily candle closure is too clean in supporting that bullish order flow that we had been seeing over the course of time. Because we had seen, for one, the inversion of this imbalance right here, the utilization of this imbalance right here, and then we've seen price action still once again presenting more bullish signatures with this imbalance that resides right here. And then the next image I ended up sending in was simply a couple hours later, and we end up seeing price action on the daily, very expansive price action towards buy side. This would be that 1800 candle that we were referring to at the very start of the video. I'm pretty sure this would be Wednesday's price action. Yeah, this would be Wednesday's price action. It's Wednesday's daily settlement opening being your 1800. So I end up seeing that daily candle immediate deliverance up towards buy side. And with the acknowledgement of this, it further establishes what I had said previously, being the daily candle closure is too clean in supporting that bullish order flow. And bullish order flow is exactly what followed once we had that 1800 opening. And what I'd said is, yeah, the daily closure was too supportive and validated my entire speculation. Power hour was utilized to flip the daily candle at the time. And then I was simply just intrigued as to how the week was going to continue deliver. So in relation to how the week was going to deliver, we've already gone through that at the very start of the video. We see that Wednesday candle deliverance up towards buy side, and then Thursday, Friday continuing that buy side delivery motion. Now, before we move on away from the NASDAQ onto Ethereum, initially I was speculating that if we came down here, we could end up having speculations for the low of the year, but we've delivered quite a rather far range away from this PDRA that resides right here. We've delivered all the way back up in here. So one could pose the question, so is this the low of the year? And to be quite honest, I don't know. There is not enough confidence for me to say that, yes, this can be your low of the year. I would have had confidence if price action delivered under an equilibrium into this monthly BISI high. But well and truly, I am a intraday trader, meaning I trade within day session. I'm not a swing trader. I'm not holding positions for months on end or weeks on end. So me knowing whether this is the low of the year or not the low of the year holds no impact on my ability to navigate price action through a day-to-day basis. If price action had came and delivered under the monthly BISI high and we had signatures of institutional sponsorship presenting itself and I was to say this is the low of the year, the only impact it would have on my day-to-day trading would be price action is bullish. But even so, that doesn't mean that we're only going to have bullish days. We're also going to have bearish days within that bullish delivery, which can offer short positions. And even so, within a bullish day, there's also going to be short positions that present themselves as well. And this is because I am an intraday trader. I'm trading within a day's range. I'm trading within a session. But like I have said multiple times, it's a lot more easier to take it day by day, simply just acknowledging what price action has done and sitting down with the facts of what price action is done in terms of its deliverance and the signatures that are being printed and presented to us in price action. So now we're going to take a brief overview on Ethereum. Now, there's Ethereum and there's BTC. I actually prefer Ethereum. I look at BTC as if it's NASDAQ and Ethereum as if it's ES. In terms of the way they deliver, BTC is a whole lot more exaggerated, while Ethereum tends to deliver in a more smoother fashion in a sense. When I am observing it, it is quite similar to in terms of the deliverance and characteristics that it has. But this is simply just going to be a brief overview of what Ethereum has done and what I'm going to be looking to see Ethereum do potentially. Okay, so taking a look at Ethereum on the monthly chart. So we have this Kraken correlation that presented itself, inviting for this sell side delivery motion, which has been carried on after our yearly opening. So we have Kraken correlation, deliverance down towards sell side, and then we have an immediate rebalance that is presented right here. And then we also have a Kraken correlation that resides at these highs right here. And then we have this continuous deliverance down towards sell side, and we end up seeing a Kraken correlation presenting itself with the low of the 2025. So the low of 2025, Kraken correlation has presented itself. And now price action is in a bit of a, well, there's no other word to put it. We're doing nothing. We're essentially doing nothing, but the nothing isn't just nothing. We're consolidating. And we know when price action is consolidating, what is occurring is the engineering of orders. And with the engineering of orders, we're engineering both buy side and sell side in this instance. Because right now, looking at this monthly chart, price action is stuck in a range, and the range has even been defined even further. So we have Feb's price action, it's high and then it's low. We end up seeing March being an inside candle inside of Feb, inside of this month. And then we have March, its respective high and its respective low. And we currently see price action still being inside of our previous month's range, being its respective high and its respective low. But what we take a notice to is the high of the month for Feb is also the low of a monthly SIBI. So moving forward onto the weekly chart, we have that Kraken correlation, deliverance down towards sell side, daily immediate rebalance, Kraken correlation, deliverance down towards sell side, and the Kraken correlation presented with the previous year low, and a standard deviation being anchored from this candle's high all the way down to this candle's low, which is projecting for a -2, -2.5, and this is where we end up seeing price action coming to a halt. And we can just further see the consolidation that is occurring here and the range that price action is being withheld in. And what we take a notice to on the weekly chart is, for one, we have a devil's mark that resides right here. And then we also have the engineering of orders. So the previous month's high, we have the engineering of orders right here. So this high fails to engage with this candle's high, in which this candle's high would be the low of a weekly imbalance that resides right here. And then you also have the monthly SIBI low that resides inside of this imbalance right here. The reason why it's not an actual candle is because, for one, we're looking at the weekly, and then for two, crypto, it runs 24/7. So weekends, holidays, it's always running. So when we take a look at the daily, I'm actually missing a standard deviation, but I'll touch on it once we get there. We have the Kraken correlation, deliverance down towards sell side. This would be your weekly standard deviation. And then we have another Kraken correlation, standard deviation. You have your -2, -2.5 standard deviation, and we see that reaccumulation of orders right here, Kraken correlation presenting itself. So with the reaccumulation of orders, this is where the daily immediate rebalance presents itself. And then we have that Kraken correlation for a further sell side delivery motion. And the Kraken correlation that the standard deviation that I'm missing here would be from this candle's high all the way down to this candle's low. But well and truly, it's not important. The standard deviations are just overlapping with each other. So if we take a look at the standard deviation, it'd be same, this candle's high all the way down to this candle's low. And we're seeing the -4, -4.5 standard deviation aligning with the -2, -2.5 standard deviation, as well as this standard deviation that resides right here as well. And it's aligning with that minus 3.5. So yeah. And after we have that cracking correlation with the previous year low and we engage with these standard deviations, price ends up slipping into a phase of consolidation, a very mean consolidation actually. It's been going on for quite a while now. So this is kind of a situation where you just sit on your hands. But what we take a notice to is the fact that, okay, we have a range from this high all the way down to this low. We deem this a range, and you have your equilibrium, and then you have your OTE that resides right here. OTE overlapping with this unfilled imbalance, as well as a devil's mark that resides just right here. And then we also have the equilibrium overlapping with this imbalance that resides right here. Right now, where price action currently is, we're still within the range of the previous month's range, and that is also in the range of the month prior to that month as well. So we're simply stagnant. We're not doing anything. But right now, what you'd be looking for is an injection of volatility towards either side. Either side works. If we end up having that deliverance down towards sell side, engaging with this with February's low, I would be looking to see a cracking correlation present itself, and then would look to see signatures of bullish order flow for price action to then come back up and engage with the previous month high as well as the monthly SIBI low. But if we end up having price action continuing the buy side delivery motion that it's showing to us right now, because for all we know, we can simply just return back down, engage with the devil's mark, maybe even leave the previous month low or come close to February's low and just engineer more orders, who knows. But if we continue the buy side delivery motion that we are currently having right now, engaging with this previous month high as well as the monthly SIBI low, and potentially also even deliver above the equilibrium of this given range, we could end up seeing a clean market maker sell model to deliver down towards sell side, engaging with all of the engineered sell side liquidity that has been occurring over the past 2 months or so. Because we have this unfilled devil's mark, we have the previous month low, relatively equal lows right here, and then we have relatively equal lows here again. And this move down towards sell side would be in a rather low resistance fashion as well. It'd be very fast because all of this is high resistance. All of this, we're just creating a TLP right here. And then taking a look at the hour 4 and price action simply just being in that consolidation. So after the cracking correlation with the previous year low, we retrace back up into the range, consolidate, but we're having a bearish consolidation here. So a bearish consolidation is occurring and we're engineering buy side. And then that deliverance takes us down to engage with this rejection block that resides right here. Engagement with this rejection block, and then we have that buy side delivery motion. So we have a standard deviation from this low all the way up to this high. -2, -2.5 projecting for this segment of price action. -4, -4.5 projecting for this segment of price action right here. And then we have a very deep retracement back down into that given range. And then continuing on that consolidation. With this deep retracement back down, another standard deviation we have from this low all the way up to this high, you have your -2, -2.5, and your -4, -4.5. So when we engage with this -2, -2.5, we have the reaccumulation for the redistribution of orders. So we return back down into the range, once again, very deep into the range. And this is the characteristic of a consolidation, very deep retracements back into a range. Deep retracement back into the range, and then we continue this buy side delivery motion to then engage with terminus being our -4, -4.5, and this is where we end up having the previous month high. And from here we have a market maker sell model. I actually don't have a standard deviation projected out here, but if we are to simply go and project a standard deviation, we are going to see, and this is a situation where a standard deviation is projected from left to right, but we have our standard deviation and we end up seeing -4, -4.5 is where we end up having another point of inception for price action to continue this deliverance up towards buy side. So we have price action delivering down towards sell side, and we end up presenting a cracking correlation right here. And the cracking correlation looks as though we have a cracking correlation with the previous month low, but BTC's previous month low is still respectively intact. It still has not been engaged with, because the engagement with this low on BTC was still ahead of our monthly opening for April. As we see, April comes in right here. The cracking correlation was presented right here. So the previous month low of March is still intact on both assets. So from here we have a standard deviation cracking So from here, we have a standard deviation from this candle's low all the way up to this candle's high, -2, -2.5, -4, -4.5. And here we're seeing the alignment of the terminus aligning for a higher time frame PD array being our monthly SIBI low. So right now, if we're to continue this buy-side delivery motion, engaging with this monthly SIBI low, we're going to see a rather fast deliverance down towards sell side, because we can see the deliverance that is being presented to us right here. We're simply just engineering a lot of sell side. We have that devil's mark that resides right here. We have all of this sell side that resides right here. So that is currently what is going on with Ethereum. But well and truly, until we are out of the range that price action is currently in, so until we come and we engage with the February high or low, there quite literally isn't anything to do. But it's the fact that we've shifted into a new quarter, and we also have this hour 4 standard deviation that was presented to us ahead of our new quarter and our new monthly opening, which is projecting for this monthly SIBI low, and we're beginning to deliver towards there. So yeah, that is currently what we're looking at for Ethereum right now. But in relation to how long it's going to be until we come and engage with this monthly SIBI low, no clue, because we've simply just been meandering around. Initially, what I was looking to see was when we had this cracking correlation with the previous year low, and we were meandering down towards sell side, I was looking to see if maybe we could end up having a cracking correlation forming with this low right here, and would have been a lot more nicer as well if the cracking correlation presented itself after the closing of the February candle. So the cracking correlation would have been presented once March had opened, but we don't end up seeing that. We end up delivering up towards buy side in a very high resistance manner, and then we get caught up in this range that we are currently in. So that is essentially it for Ethereum. Now, in relation to the assets I look at all of these assets that are here. These are all of the assets that I look at, and for many reasons. The most important reason would be intermarket relationship. Even though these are completely different markets, and I always use these terms interchangeably, being markets and assets. Markets would actually be like, okay, your market would be indices, and your next market would be commodities, and your next market would be forex, next market would be crypto, and next market would be oils, next market would be bonds. And then assets would be like NASDAQ, ES, YM. Those are assets inside of the market of indices. And gold, silver, platinum, zinc, copper would be assets inside of the market of commodities, and so on and so forth. I always use them interchangeably, but yeah, if you want it to be technical. But in relation to the assets that I look at and the markets that I look at, it would be all of these. And for the main reason, it would be because of intermarket relationship, because even though these are different markets, and even though they don't look the same, there is still a correlation that can be made between all of these assets. And in relation to, okay, when is my attention being drawn to certain assets? Right now, like with gold, there's nothing I'm looking at on gold. Initially, I'm not even sure if this was in one of my analysis, weekly analysis, or weekly reviews or trade analysis. But in relation to gold, what I was looking at was, we were here at this point in time, and I was saying, very obvious, we're drawing towards this yearly opening right here, and that is exactly what we've done. We've drawn down to the yearly opening, and we did this on the 23rd of March, engaging with the -4, -4.5 standard deviation, and now we're retracing back into the range. I no longer have any interest in gold. Why? Because we're currently at an equilibrium of this given range, so from this high all the way down to this low, and we can see what gold is doing. We're simply just doing a whole lot of nothing. There's no interest for me in gold. In relation to forex, there can be interest here, because we're doing something of significance, but EU isn't really an asset that I look to trade. There's a tier list in terms of what assets I'd look to trade, in a sense. Of course, indices would come first, and then it would be commodities, and then it'd be oils, and then it would be EU, in a sense. But of course, I am paying attention to forex, because very important for intermarket relationship, as well as the fact that you have the dollar that resides right here as well. And even so, my charts are completely, I haven't even updated. I thought I actually updated that. That's quite, bad form for me, in a sense. But dollar chart needs to be updated, so that's a note to self. But yes, and then you have Ethereum in terms of the interest that is spun here is simply because of what we are doing and what we have done so far. And then you have oils, absolutely no interest. Absolutely no interest. We do have a cracking correlation with this high right here, but no interest whatsoever at this current point in time. This is very, yeah, speaks for itself. And then we have bonds, and once again, these charts are not updated. Reason why these charts aren't really updated is because bonds isn't something I trade. So, and dollar isn't something I trade. These are just asset. Let me see if EU has been updated. Well, EU hasn't been updated, so Forex just hasn't been updated overall. But bonds isn't something I trade, and bonds is something that you'd look at from a complete higher time frame perspective. I'm not going in and looking at the 4 hour, maybe because it's higher time frame. I'm not looking at the 1 hour. I'm not looking at the 1 hour. I'm looking at the daily. I'm looking at the weekly. I'm looking at the monthly. But these are simply just all for that intermarket relationship. And then you have stocks right here. In relation to the stocks that I look at, it would be Microsoft, Amazon, Nvidia, Tesla, Meta, Google, and lastly would be AMD.